Create a dream to grow and make a difference. And a billion dreams together weave the India story. A dream is powerful. Since its inception, the bank has enabled MSMEs to experience most convenient and faster delivery of Sylvie's specially tailored credit products for meeting different business requirements.
हेल्पर से स्टार्ट किया था। हेल्पर से स्टार्ट करके मैं परचेस मैनेजर तक पहुंचा। आगे ग्रो करना था तो उसके लिए हमने जगह अभी जो एग्जिस्टिंग है हमने प्रेमाइसेस की परचेस किया। इसको बनाने के लिए हमें फाइनेंस की आवश्यकता थी। उस समय में हमने सीबी को अप्रोच
enabling MSMEs to receive loan offers from flagship programs of government of India. To address the critical problem of delayed payments in the MSME commerce, that is ONDC, which is expected to democratize the digital commerce in the country, the bank is also embarking on a major project for formalization of
IDFC, actually, so you have registered small finance at the residential, but then become a sponsor, so you become
Yes, sir. Thank you. इसका हमने पहले भी करा है
नहीं इसमें हाँ न्यू लिस्ट है वन पेज की ये मेरी आप इधर लगे
201 बेटे को शिवम किट लिया देख लो ये वाला काम बना रहे हैं काम बिगाड़
Namaskar everyone, and a warm welcome to Sa-Dhan National Conference on Financial Inclusion. We thank you all for joining us this morning. Winters are beginning to set in Delhi. It's a slightly chilly morning, so thank you once again for joining us this early. The theme for our today's program, of course, is promoting women-led enterprises. Microfinance leads the way. Now, before we begin our today's program, ladies and gentlemen, we'd like to extend our tributes to two members of the Sa-Dhan fraternity, the Sa-Dhan family, who in fact we unfortunately lost this year. And Sa-Dhan and the microfinance industry, in fact, lost two legendary personalities who contributed immensely. Both of them put up a remarkable impression on the lives of millions and worked for the development of this sector. We pay our tributes to both of them. One is Srimati Ila R. Bhatt, who fondly was called as Ila Ben, was a doyen of Indian microfinance movement. The Seva Bank was started by her in 1973 and is perhaps one of the first initiatives in financial inclusion and providing financial services the world by mobilizing poor women and bringing them under formal banking. Ila Ben has changed the lives of millions through her various initiatives. She was the founder of the World Women's Bank and several other initiatives that were under Seva Group that were all focused, in fact, at the development of women. A lawyer by training, Srimati Bhatt was a part of the International Labour, Cooperative Women and Microfinance movements, and she also won several national and international awards, including the Ramon Magsaysay Award in 1977, the Right Livelihood Award in 1984 for helping home-based producers to organize for their welfare and self-respect. She was also the recipient of the Padma Bhushan for her invaluable contribution to the upliftment of the poor, especially, again, women. And she was one of the founder members of Sa-Dhan in 1999 and remained its chairperson for a very long time. She was our guide, our mentor, and officially the chair emeritus till her last breath. Ila Ben has been recognized as one of the world's most remarkable pioneers and entrepreneurial forces in grassroots development. She has dedicated her whole life to improving the lives of India's poorest and the most oppressed women workers. And she was called to eternity on the 2nd of November 2022, just a few days back, at the age of 90 years. Secondly, we'd also like to remember on this day Dr. P. Satish, who was with Sa-Dhan as the executive director since 2015 and in fact left to join the heavenly abode on 29th of May 2022. He was the face of Sa-Dhan for the past 7 years and played a very crucial role in reshaping Sa-Dhan. And a thorough gentleman, down-to-earth personality, erudite, patient listener, dedicated researcher, and upfront at the same time. And lastly, a globe researcher, and he was in fact upfront all the time. And for many of us over here may have not been aware that Satish sir could in fact speak 13 languages. And, understood even more. He's always been a great leader and guided Sa-Dhan with his wisdom and knowledge and was always considered a credible voice for the sector and also ensured that Sa-Dhan was on the policy table, be it our stakeholders or the regulators. The small and medium MFIs, in fact, also got their voices heard many times because of because of his decisions, because of his firm decisions. And he will, in fact, always be remembered as a highly accomplished and a gem of a person. So these two personalities, eminent members from the fraternity we've lost this year, just extending our heartiest tributes to them today before we proceed with our today's program. And with that, ladies and gentlemen, it's time for us to now formally open our today's program with the inaugural ceremony. I am going to request all of you to please put your hands together and first of all join me in welcoming Mr. Jayant Sinha, the Chairperson of the Standing Committee on Finance, Parliament of India, Honorable BJP Lok Sabha Member of the Parliament from Hazaribagh, Jharkhand, who is joining us as our guest of honor today. Let's all give him a big hand and welcome him as I invite him to light the ceremonial lamp and inaugurate our today's program. And I'll also invite Mr. Anil Kumar Sharma, Executive Director, Reserve Bank of India, a very special guest. Another very special guest, Mr. V. Vaidyanathan, MD and CEO of IDFC First Bank Limited. And Mr. Jiji Mammen, ED and CEO of Sa-Dhan, Mr. H.P. Singh, Chair of Sa-Dhan, to please join us for this little ceremony to seek the blessings of the Almighty and thank Him for a new day of learning. as we do at the beginning of all of our endeavors, light the ceremonial lamp, light which symbolizes knowledge. We thank the Almighty for giving us this new day. And with that, our guest of honor, Mr. Sinha, and distinguished dignitaries now inaugurating our today's program at Sa-Dhan, National Conference on Financial Inclusion. Thank you very much, and I'll request with that our distinguished guests here to now join us on the stage, and request everyone to please once again welcome them with a big round of applause. Our guest of honor, Shri Jayant Sinha, Shri Anil Kumar Sharma, Mr. V. Vaidyanathan, Mr. Jiji Mammen, and Mr. H.P. Singh now joining us on the dais for this inaugural ceremony. Welcome everyone once again to Sa-Dhan National Conference on Financial Inclusion. And at the outset, we'd also like to extend our heartiest welcome to our guests here. A little plant sapling on behalf of all of us here from Sa-Dhan to welcome our guests. I'm going to request Mr. Jiji Mammen, ED and CEO Sa-Dhan, to first of all present this little plant sapling on behalf of Sa-Dhan to our guest of honor, Mr. Jayant Sinha, a little symbol of growth and prosperity. And to Mr. Anil Kumar Sharma, ED, Reserve Bank of India. Thank you, sir, for joining us this morning. And one to Mr. V. Vaidyanathan, MD and CEO of IDFC Bank Limited. And without wasting any time, I'm going to request Mr. H.P. Singh, Chair of Sa-Dhan, to kindly give the welcome address and also unveil the new face of Sa-Dhan. Tell us more about that. Please welcome him.
Honorable guest of honor, Mr. Jayant Sinha, Chairperson of the Standing Committee on Finance, Parliament of India. Respected Mr. Anil Kumar Sharma, Executive Director, Reserve Bank of India. My guide and mentor, Mr. V. Vaidyanathan, MD and CEO, IDFC First Bank Limited. Dear Mr. Jiji Mammen, ED and CEO, Sa-Dhan. And all present dignitaries. Good morning. Warm greetings to all of you and welcome to the 17th edition of Sa-Dhan's National Conference. First of all, we give our tribute to Ila Ben, as she was fondly called. She was one of the most iconic activists and a true Gandhian, a champion of women's rights and the voice of the voiceless. She founded the Self-Employed Women's Association, SEWA, of India, with the vision of empowering women, and also played a pivotal role in the microfinance sector. One of the founding members of the Women's World Bank, she inspired many families to rise above hardships by giving women more control over their financial lives. The terrible news of her passing away has impacted all of us. She had not only laid a strong foundation for the upliftment of women, but also sought and fought fearlessly for it. My deepest condolences go out to her family and friends, as well as to all of her admirers. We also suffered the loss of our beloved Dr. P. Satish, who helmed Sa-Dhan and worked tirelessly to take it to new heights. His kind demeanor and determined efforts left an everlasting impression on all of us, and we shall always remember him and work towards championing the cause of the marginalized sections of the society through Sa-Dhan. We pay our tribute to him today. It feels like yesterday when he was with all of us, all smiling and calm during the last conference. Grateful for the contribution of these noble souls in mind, I would like to start this conference. This national conference is our 17th edition, and I am very excited to have you all join us. This is our second conference since the 2-year hiatus caused by the pandemic. COVID hit us in a very unexpected way, and the global economy took a major hit. The microfinance sector also received the brunt of this and tried to keep the boat floating for low-income borrowers. Owing to this, our theme for last year was Revitalizing Microfinance, where we focused on restoring and rebuilding the microfinance sector to its original space, place, and glory. We also focused on creating a roadmap for restructuring the sector and promoting responsible finance. While the pandemic had disrupted lives, routine, businesses, and communities, we placed an emphasis on helping our clients to rebuild their businesses and lives. In the past year, we have placed more importance on the lives of our clients than our short-term financial gains. We dove deep into understanding the struggles of our clients, especially the owners of small enterprises, and analyzed their problems post the pandemic. The industry suffered huge losses due to this pandemic, and still we were able to absorb these losses due to the inherent strength of our business model. We worked towards revitalizing our clients, their businesses, and lives, and actively took part in helping them in any manner we could. While we battled the pandemic, trying our best to support our clients by either restructuring their loans or by giving moratorium, we all suffered commercially. However, the pain of microfinance institutions suffering losses led to a negative outlook about the sector. It was hard that only our commercial performance was judged, despite the fact that we represent the weakest section of the society, and the asset class we serve needed more handholding. I want to thank and congratulate each and every one of you for participating in helping rebuild and restructure the lives of our clients, strengthening the trust in the microfinance sector. Because of your efforts, the microfinance industry witnessed a growth of over 13% in the last quarter of the fiscal year 21-22, and industry grew on 5% year on year. We have majorly recovered from the hits of the pandemic, and our clients have recovered well in the past 1 year. This year is of extreme importance for us and the nation, as India will be assuming the presidency of the G20. One of the major sections of the G20 is the GPFI, Global Partnership for Financial Inclusion. It is expected, and rightly so, that gender will be mainstreamed during G20, which is a powerful platform for international economic cooperation representing around 85% of the global GDP and about 2/3 of the world's population. G20 has been placing huge importance on financial inclusion, recognizing it as a key enabler of fighting poverty. G20 Empower focuses on entrepreneurship, employment, and education, thus confirming the critical role we play through our line of work. In the last couple of years, the Government of India has taken several measures to promote universal and easier access to finances for all. This is why we have decided to make financial inclusion the theme of this national conference. At this platform, we will be discussing and analyzing the importance of financial inclusion and promoting women-led enterprises. We will focus on the importance of institutions to better serve low-income households. In addition, Sa-Dhan is also looking at financial inclusion with the role of MFI's contribution to the economy of the nation and steps we will be undertaking this year. We will also be deliberating on national priorities like microinsurance, micropension, microenterprises, clean energy and climate change, affordable housing, integrated health, water and sanitation, digitization, and the microfinance sector, and how financial inclusion can give a flip towards the elimination of poverty and the benefits of its universalization. Sa-Dhan is the largest and oldest association of community development finance institutions in India and a self-regulatory organization, an SRO, with diverse legal forms, operating models, philosophies, and sizes. We have been engaged with the Government of India, state governments, RBI, NHP, NABARD, SIDBI, and others in promoting responsible finance, regulatory regime, and facilitative policy. Our focus has always been to build the field of community development and microfinance in India while helping its members and associated institutions to better serve the low-income households. In addition, Sa-Dhan has also placed a strong emphasis on empowering women in both rural and urban India in their quest for establishing stable livelihoods. With a loan outstanding of over 1,28,000 crore, the network reaches out to 33 states and union territories with 44 million clients in its network and works in 602 districts in India. We have been instrumental in transforming the lives of millions during our journey. While the microfinance sector has been growing at a steady pace post-pandemic, there have been some major changes occurring lately. The dynamics of MFI have been changing due to the new RBI guidelines introduced. While the RBI is trying to regulate the microfinance sector, it is also trying to build greater trust across the industry by tightening its guidelines and security. On 1st April 2022, the RBI introduced a new framework for microfinance lenders. Under the revised guidelines, which aimed at providing a level playing field, the MFIs were allowed to set their own interest rates as approved by their board. The RBI also brought parity in other disclosure and asset norms. Along with these changes being brought about, India has also been focusing on digital development in various sectors and moving towards integrating digital transformation to boost various industries. New startups are focusing on building new age solutions for the new era as we develop and progress in various industries. Fintech solutions are revolutionizing various sectors and have been bringing about a digital transformation. One of the biggest examples is the transformation of the healthcare sector. While the pandemic caused major disruption and challenged the global economy, it also paved the way for a virtual model of healthcare. The virtual world evolution that took place during the pandemic focused on providing a better healthcare model and encouraged the world to leverage on the digital platform for more efficiency. With the dynamic world around us, we at Sa-Dhan too have changed from our earlier avatar. We are now bringing in a new Sa-Dhan. It is part of our evolution. It's part of our metamorphosis. While we have come a long way and created a major impact, we do not want to stop here. I believe that there is much work to do. There is much to achieve still, and it can be possible only if we focus on rebuilding and strengthening some of our core functional structures. With the integration of digital transformation, there is an incredible opportunity for growth and expansion. Our aim is to be more proactive, create a larger circle of impact, and become more attentive to the needs of our members. There has been a change in perceiving for-profit organizations as a means to make a meaningful impact in the inclusion space, as this provides a sustainable solution towards the goal of serving the unbacked and marginalized sections of the society. Our very business model encompasses the Sustainable Development Goals, SDGs, especially in the area of reduction in poverty, gender equality, reduced inequality, decent work, and economic growth. Even the goals like clean energy, drinking water, and sanitation, affordable energy, good health, and well-being are being complemented by our business. We lay great emphasis on social impact, which makes our contribution in the ESG space very significant. Now is the time when we evolve to bring more proactive and reach beyond the defined borders of microfinance to enable impact and inclusion to the masses. With a sharper advocacy and capacity building role, we aim to increase our fundraising efforts, bringing on board more collaborative projects, and conduct more outreaches to other ministries while expanding our footprint further. However, our core remains the same, which is women empowerment and financial inclusion. With this as the backdrop, let me unveil the new Sa-Dhan as final part of my speech. It makes us happy to share that we've got a new tagline, which is fostering inclusive impact finance. Our vision is promoting an economically and socially empowered inclusive society. And our mission is to promote and foster inclusive impact finance institutions to support low-income households, particularly women, to achieve stable livelihoods, improve their social and financial well-being and quality of life, and fulfill sustainable development goals, capturing our transformation. This truly represents the spirit of our goal, which is to develop, promote, and support ecosystems of impact financing institutions, which enables inclusive growth, equity, gender equality, and sustainable development of the society, and for which we undertake, support, and facilitate. Point one of our goal, we want to be the facilitator of impact finance in India. Number two, we provide common platform for advocacy representing different models and approaches to inclusion with focus on microfinance in India. Function as SRO of choice, focusing, representing and protecting interests of all stakeholders in microfinance ecosystem, including customers, lenders and regulators. Fourth, promote transparency and good governance among all members. Fifth, facilitate and promote enterprises among weaker sections of the society, especially the women. The sixth goal is to support and address gender issues with a focus on women empowerment. Seventh, act as a catalyst from financial inclusion to a digital inclusion and inclusive growth of bottom-of-pyramid clients. Again, be a catalyst and contribute to social development goal of the country. Ninth, work, support and facilitate issues of global and national interest like climate change, compliance to ESG, etc. And finally, enable action, research, development of tools and resources that facilitate dialogue and synergy of best practices between different operating models and stakeholders. The objective of Sa-Dhan is to foster and support the impact finance sector. Our aim with integrating digitization is to keep us with the changing dynamics of finance and help our clients to do the same. Let's discuss this more and find out how we can reach these new heights and challenging norms. We are responsible for shaping the future of Sa-Dhan and impacting the microfinance sector and above all, creating a far more inclusive society. So let us ensure that our pioneering efforts help in building a more robust and more resilient financial ecosystem for the nation. Welcoming to our new and vibrant Sa-Dhan, let us focus on increasing our impact and strengthening the economy of our country through extended support to low-income households. Thank you so much.
Sa-Dhan, a community development finance association, started in 1999 when the microfinance sector was in its nascent stages. The microfinance activity was dominated by SHG bank linkage program then. Microfinance institutions, as specialized institutions for microcredit, started to come up in this country at that time. So that is the time when Sa-Dhan came into being. Reserve Bank of India came up with regulations in 2012 and subsequently in 2022. Two SROs were appointed in the sector, including Sa-Dhan. So these changes had happened in the sector itself. The sector also saw a few crises happening. Along with this, several other developmental activities also started in the country, which included many impact finance players coming into the field. The Sustainable Development Goals as well as the ESG became the focus of development. Impact financing became a buzzword. So all these changes happened in the last 23 years subsequent to Sa-Dhan's formation. Sa-Dhan is going to celebrate its 25th year next year. It was felt that it is time for us to take a relook and see how Sa-Dhan should be moving forward.
Post the pandemic, in this new era, the thought was to create a new Sa-Dhan, which goes beyond and encompasses financial inclusion in a much more broader and a holistic way, without losing its essence. Sa-Dhan, which is also an SRO, as well as an enabler for new avenues, which make impact by building financial inclusion with digital footprints. In today's world of fintech, we believe that Sa-Dhan has got a new role to play. And also trying to enrich lives and livelihoods with the objective of sustainable development goals. Sa-Dhan will lead the way to a paradigm shift about how the stakeholders perceive microfinance, which is its core. We shall also promote women empowerment and gender equality as a part of inclusive agenda.
Now you have a lot of players in the developmental area. So Sa-Dhan has to be a much more inclusive institution, inclusive association. So that is the reason why Sa-Dhan thought that we should have a relook and we should take a new direction for the future. The board of Sa-Dhan went through a process and decided to have a change in the vision, mission statements, as well as the goals, which is going to make Sa-Dhan a more inclusive institution and bring a much more comprehensive development in the grassroots level at the bottom of the pyramid.
Thank you very much, Mrs. Singh, for unveiling the new face of Sa-Dhan. It's been 25 years of Sa-Dhan. And with that, I'd like to now invite Mr. Jiji Mammen, the ED and CEO of Sa-Dhan, to kindly address the gathering and also give a snapshot of the Bharat Microfinance Report 2022, which we will be shortly releasing.
Good morning to all of you, respected dignitaries on the stage, Honorable Sri Jayant Sinha ji, Sri Anil Kumar Sharma ji, Sri Vaidyanathan ji, Sri HP Singh ji, and distinguished delegates and dear friends. As you are aware that Sa-Dhan brings out an annual publication called Bharat Microfinance Report, which is a sectoral report. We try to make it as a sectoral report, bringing all the details of microfinance happening in the country. So this time also I'm happy to announce that we have been able to compile the microfinance, Bharat Microfinance Report, and it will be soon, it will be unveiled, it will be released. Before we release the microfinance report, I thought I would give some quick snapshot about what are the major highlights of the report this year. See, we have been trying to bring the maximum information into the report so that it becomes one-stop source of information for the entire stakeholders, financiers, investors, bankers, everybody to look into that and get the maximum information on that. So this year also we were able to bring in, we would be able to compile information from 213 microfinance institutions in the country. Probably a few more we are left out, but I'm sure 97% of the microfinance sector is covered in this report. We have also tried to give a overall picture of the microfinance sector, including because when we are saying that I compiled from microfinance institutions, it's basically the MFI contributions. But we also know that other players are there, like many NBFCs are there, banks are there, small finance bank as well as other banks who are also involved into the microfinance activities. So that information is also compiled by taking information from the Equifax, which is the credit bureau in our country. So we have, can we have the slide please? So we can see that, now microfinance sector has moved into all the parts of the country, which is covering all the 28 states and all the union territories. And we have all the districts, most of the districts covered by now. Around 600 plus districts have been covered. Maybe there are a few more districts in the country which are still not having a microfinance presence, but I'm sure we would be able to move into that also. There are around 22,000 branches working across the country with almost 2 lakh employees in this sector. If you see the employees, around 60% of our employees are in the field, working in the branches and directly dealing with the borrowers, which includes, the staff includes around 13% of women staff also. Probably looking at the target clientele we are addressing, probably the women's staff strength may be a little bit less. I feel probably the MFI should also take note that it should be moved into, maybe we can have more participation of women staff going forward. If you see the states, you see that we have around 12 leading MFIs which are operating in more than 15 states. In fact, in 2013-14, there were only around 5 MFIs which were having presence more than 15 states. But today we have 44 institutions having more than presence in more than 10 states. Sorry, I'm talking about 10 states. So similarly, if you see the number of MFIs working in different states, we have as high as 65 MFIs working in a state like Tamil Nadu, or we have around 58 MFIs working in a state like Bihar, and also we have a state like Nagaland with 1 MFI. So, but then we have a satisfaction of having all the states covered by the microfinance institution by now. Yeah, next. This is the basic data which we can see here. We have around 45 million clientele at the moment serviced by the microfinance institutions alone. If you look into the banking sector, bankers also, it could be as nearly as around 6.6 crores. In the microfinance sector, we have 45 million, 4.5 crore client base, of which has increased by 6% over the last 1 year. We have around 24% addressing to the SC/ST clients, 9% the minorities. And this 45 million, I feel probably we can expand it further much more. Because if you see the last 3-4 years data, the client base is almost hovering around 4.2 to 4.4 crores. That means probably we are looking at the already reached clienteles. We may be financing again. This base can definitely can be broadened. So that is what I would say in this connection. We have a gross loan portfolio of 1.35 lakh crores, which is a growth of about 19%. But then if you see the 1.35 lakh crores of portfolio, we have around 92,000 crores as on-balance sheet portfolio, which is on book of the MFIs, and around 42,000 crores of the off-sheet balance sheet. Basically, they are the managed portfolio, because of which around 30,000 crores is the BC portfolio. There is a growth of 23% growth as far as BC portfolio is concerned. We have been seeing that the number of MFIs coming into the BC portfolio is becoming larger. Probably that is one reason. The reason is that probably it is easy to get a wider coverage for the microfinance institution without getting into the funding difficulties. So this is how the loan portfolio looks like. Next. See, if you see the growth, of client as well as the GLP, that is the gross loan portfolio growth, we can see that last year we have grown by 19% as far as the portfolio is concerned. But then you can also see this graph, which is how it has been moving up and down. In the last 2 years, because of the pandemic, there has been decline in 2020, which has slowly started picking up, and we have been able to reach 19% in 2020-22 March. Whereas, as I was telling, that the growth of clientele, that probably can be a little more sharper. If you see the last 4 years, as I was telling, that it was hovering around the same number. So probably we need to look at expanding our client base a little more aggressively. Next. This is an operational landscape of the microfinance sector. We have around 10 MFIs, major MFIs, who is providing almost 60% of the the funding support to the microfinance sector. That is 61% is contributed by these 10 top 10 MFIs. There is the loan disbursement, if you see, it was 1.13 lakh during last 1 year, which has a growth of 39%. But then if you see, this 39% is basically from a lower base of 2021. If you compare it with 2020, the growth is around 6%, because from 2020 the disbursement had gone down in 2021, mainly because of the lockdown and the moratorium lockdown and the pandemic issues we had. And it has started picking up. And now I am sure this year we have got much more better traction as far as the growth is concerned. The clientele of the microfinance sector still is dominated by the rural sector, which is quite understandable, because our country being mostly rural oriented, the number looks to be on the right side. Yeah, next please. This is about the financial parameters. The total income of the sector as a whole has grown by 41% during 2021-22 and touched around 19,000 crore total income. As I was telling, that here also the growth, if you see, the growth is basically from a lower base of 2021. Regarding the expenses, there was a growth of 24% and net surplus of around 662 crores during the year 1,184 crores in 21-22, as against around with a 662 crores increase. If you see the income part of it, it is mostly constituted by the income from the microfinance lending. Around 76% is from the microfinance lending. Finance, in the expense side, if you see, the 55% of the expenses is from the financial cost, because basically the microfinance institutions borrow from the other financial entities like the SIDBI, NABARD, like financial institutions, or from the banks. So the financial cost is definitely a higher component as far as the expenses are concerned. So 44% is constituted by the financial cost. The remaining is by operational cost, which we all know that it's a high-touch business. You need to have large number of staff to reach the borrowers, because basically you're doing a doorstep delivery, doorstep service. So to reach the borrowers for right from the application, sourcing of application, then disbursement of the loan and collections requires a large number of persons. Even in a digital world where we are definitely moving towards digital, I know. But then even in a digitized scenario, I don't think we can do away with the high-touch activity of microfinance. We have to be digital, both physical as well as digital, when we go forward. So the expenses, operational expenses will continue to be higher. Next. Loan portfolio, it's quite understandable. In the last 2 years, we have seen how the loan portfolio has deteriorated because of the pandemic. I'm sure things are now improved a lot. This year, we must be having much better results. Before the pandemic, our PAR 30 was nearly 1%. It has gone up to 8.35% at the moment. This 8.35 is without discounting the PAR above 180 days. Generally, the PAR above 180 days, which is fully provided for, is written off from the books of many of the MFIs. If you take that into consideration, the number would be around 5.27%. So still it's a high number as far as the PAR is concerned. I'm sure things would come back to the normalcy soon, and it's already, I'm seeing that kind of attraction at the moment. Above 180 days, there was around 4,800 crores of portfolio. Probably that must have been written off by the MFI sector. And going forward, I'm sure things would look much better. When you talk about the PAR, there were around 20%, around 10% of the MFIs which had more than 20% PAR. Around 12% had 10 to 20% PAR. 15% had 5 to 10% PAR. And around 34% of the MFIs had less than 1% of the PAR. So between the institutions also it varies. And one thing which we are seeing is that PAR numbers are lower as far as the smaller entities are concerned. Basically, the non-profit entities are concerned compared to the profit entities. Next. These are some of the key ratios as far as the sector is concerned. The operating cost is around 6.96%, which is slightly higher than the previous year. One good thing is that if you see the average borrower per credit officer, that is how many accounts are being serviced by an officer, probably that number has come down maybe because of induction of more staff. The yield yield, capital adequacy, etc., margin are all as per the norms which have been prescribed by RBI. But if you see the yield part of it, probably that is not given here. We can see in the books. The yield, the effective yield has come down. If you see 2016-17 to 2017-18 and 18-19, the yield, effective yield was somewhere around 20%, 20 plus. Whereas in 2021, the effective yield came down to 16.8%, and in 21-22, it has come down to 16.5%, which means the sector has lost. Although your contracted, the contracted yield rate must have been 20 plus, but the actual collections was lower, which we know that we are seeing the graph also, how the PAR has impacted that. The weighted average of rate of return on assets and return on equity is satisfactory, 1.1% and 4.2%, and we have a self-sufficiency, overall self-sufficiency of 114% sector as a whole. Next. This is the balance sheet looks like. The asset increased to 1,14,000, which includes 79% of loans and 13% of the cash and cash equivalents. The net on assets, net on funds of 22,000 crore consists of around 6,000 crore of equity. Then MFIs collectively raised about 1,958 crores of new fresh equity during the last year, that is 21-22. And total funding support from the banking institution and the development financial institutions was at 64,693 crores, which was higher than the previous year, which shows the financial institutions have gained more confidence in the sector, and this number is going to go up during the current year. Next. Self-help group, which is the first initiative as far as microfinance movement is concerned, which started in 1992 and which is we are celebrating the 30th year tomorrow. It's 3 decades now. It has become a major player as far as microfinance sector is concerned. It's the world's largest microfinance movement in the movement. So we have around 119 lakh of SHGs linked with banks, of which around 67 lakhs are credit linked with 1,51,000 crores. We have SHGs savings at around 47,000 crores, and the loan disbursed during the last year has shown a substantial increase from 58,000. It has increased to almost 1 lakh crores during 21-22. It is almost 70% increase. NPA has come down, which is a quite reassuring aspect. Even in a pandemic period, the NPA has come down in SHGs are concerned. Next. This is the overall status of the MFI sector, as including the banks and other entities which are the players. We have around 2.63 lakh of 2.63 lakh crores of total combined portfolio, which is a growth of 5%. We have around 10.8 lakh active accounts. We have around 6.13 crore the unique borrowers, and disbursement during the last year was around 2.54 lakh crores. Average ticket size has increased. It has moved up from 37,000 crores to 39,000 crores. Par value, as I was telling, it has been around 5.27 for the sector as a whole too. Next. These are some of the major highlights as far as the overall industry is concerned. Banks are leading with 39%. Okay. Right, next please. So this is something like district-wise penetration we are seeing, and so with this I conclude, and we will be releasing the booklet. You will be getting one copy of the booklet from the counter. There is already a coupon given to everyone. You can collect your copies, and I'm sure that will benefit the entire sector. Thank you so much. Can we have the books? Come, come.
Ladies and gentlemen, we present to you the Bharat Microfinance Report 2022, just now unveiled by our guest of honor and dignitaries here. And like Mr. Mammen mentioned, the copies will be available at the registration counter during the lunchtime. Please feel free to get your copy. The Bharat Microfinance Report 2022. And also in the light of the new regulations, there is now in place a new code of conduct for the sector. I'll request Mr. Mammen to also very briefly tell us more about it, and then we can also show you what it looks like.
I will not take any time on that. I will only say that with the new regulations coming into play, we have also modified the code of conduct, which was already in place. 2019 was our last time we updated it. This time with the new regulations, we have updated further, and this was released on 4th of October, and a copy of that will be available to each microfinance institution from our counter. Thank you.
Well, thank you. And in the interest of time, I'm going to now request our guest of honor, Shri Jayant Sinha, the Chairperson of the Standing Committee on Finance, Parliament of India, also Honorable BJP Lok Sabha Member of the Parliament from Hazaribagh, Jharkhand, to now address the gathering. Let's all give him a big hand, ladies and gentlemen. Please join me in welcoming him once again.
Thank you very much, and a very good morning to all of you who've assembled here for what promises to be a very productive day of deliberations and of course to celebrate the 25th anniversary of Sa-Dhan. So for those seated on the dais, Shri Anil Sharma ji from the Reserve Bank of India, Shri Vaidyanathan from IDFC Bank, Shri H.K. Singh, and Shri Jiji Mammen from Sa-Dhan, and all of you who are assembled here, my very, very warm congratulations for all the work that you've done in microfinance over the last 25 years, and all the work that you've done to build up Sa-Dhan into a wonderful institution, and to build the microfinance movement in India into one that is a role model for the rest of the world. So from my side to all of you, a very warm and hearty congratulations for what you've accomplished in the last 25 years. Along with that, I also want to acknowledge the role of the two pioneers that were highlighted this morning, Mr. Satish, but most importantly, Srimati Ila Bhatt, for all of us who've been associated with the microfinance industry in India. She was, of course, the pioneer, the lady who built the industry up and was an inspiration to all of us. So I join all of you in paying my heartfelt tribute to Ilaben and everything that she meant for microfinance in India. Now, it's been my great good fortune to have been associated with the microfinance industry over the last very many years. First, as Managing Director of Umedia Network, which over the years, both in India and around the world, has really, through its impact investing and its philanthropic efforts, made a tremendous contribution to the growth of microfinance around the world. And so when I was at Omidyar, we worked very closely with Sa-Dhan and many other microfinance institutions. And then, of course, when I joined public life, first as Minister of State for Finance and then as Chairman of the Standing Committee on Finance, I have been very closely associated with the microfinance industry and all the excellent work that you all have done. I have also benefited at the same time from my vantage point as a Lok Sabha MP in Hazaribagh in Jharkhand, where we have thousands of self-help groups working right now. And in fact, Hazaribagh and Ramgarh were selected by NABARD as being the first districts where self-help groups were digitized. And this has, of course, been a tremendous boon for self-help groups in my two districts. But it has also grown the amount of credit that's available and made it much easier for our Didis to be able to participate in microfinance. So I think the work that the industry has done over the last 25 years is extraordinary. And everything that you are doing every day to contribute to the growth of this industry has to be acknowledged and encouraged to the fullest extent possible. So once again, thank you for everything you do for microfinance. But I want to talk about something a little bit different now, which builds on what we're doing in microfinance and is, in fact, a very big challenge for all of us at the grassroots right now. And I want to talk about sustainability and particularly climate change. Microfinance has a very, very important role to play in helping us deal with these challenges. But you will only be able to deal with these challenges if you're fully informed about what's coming. Now, the COVID pandemic was a big shock to all of us. And right now, Shri H.K. Singh and Shri Jiji have explained how the pandemic set back microfinance. Now, if we don't will deal with all the other sustainability challenges that are coming our way, we'll find that these will be even bigger setbacks and even more difficult. And that's on the adaptation side, which is dealing with the impact of climate change and so on. But we also have a very important role to play. Microfinance has a very important role to play when it comes to mitigation, which is trying to reduce our carbon emissions, reduce what these kinds of emissions are doing to our economy and to our people. So there's a very important role for microfinance to play in this regard. And I want to spend 15 or 20 minutes talking to you about a net zero development model, getting to the green frontier, which is what I have been advocating as the best way for India to deal with the sustainability challenges that we are confronting. But first, let me take a step back and talk to you about economic development. So when we think of economic development, the economist's view is that it's farm to factory. We have to take people from the farm, that is in this case Chinese peasants, farmers working in a paddy field, and we've got to put them in a textile factory, and we have to really drive two vectors, industrialization and urbanization. When we drive these two vectors, we have economic development, and that is a farm to factory development model. Now, as a former consultant, I have to have a graph. I have to sort of make it a little bit more abstract. So think of it this way, that we are dealing with two dimensions. One dimension is the planet and the planet's carrying capacity. The other dimension is what people need, which is jobs and wealth and growth in GDP. And it is technology. Now, speaking as an engineer, not as an economist, it's technology that moves our production possibilities forward. And when we use technology, when we industrialize, that's when we move out of the farm and we increase our production, and that's how we improve the planet's carrying capacity as well as job creation, wealth creation, and so on. So that is the theory. That's how farm to factory works. That's what economists will tell you. And therefore, we move the production frontier forward. We move to the factory stage, and industrialization and urbanization drive growth and economic development. Now, unfortunately, while that is the theory, the reality is a little bit different, particularly for India. We are a late developing country. China, Japan, Korea have already developed before us. Lots of the South America has developed before us. And so pursuing the farm to factory development model is proving to be quite difficult for us. So while we are increasing jobs and GDP and wealth, what's happening to the planet and sustainability is becoming a serious question for us. And we are dealing with issues like the pandemic, we are dealing with climate change, and one other issue that we are dealing with, which again microfinance has a very important role to play, it is in job creation. So when we look at the sustainability challenges that we are confronting right now, these are some of the big ones that we have to deal with. Now, all of you will say pandemics are not a sustainability issue. It's a public health issue. Why are you bringing up pandemics and saying it's a sustainability issue? How did the coronavirus actually spread? Now, there are two theories. Let's, for the moment, ignore the lab theory and let's talk about the bat theory. What happened? We had bats, and these bats infected, the viewers' civets, for example, or pangolins. Those ended up in a wet market in Wuhan, and as a result of that, the coronavirus entered human beings, it entered people, and from there, from Wuhan, it spread around the world. Now, how did that happen? It happened because human beings are encroaching on natural habitats. Forests are being cut down. In fact, if you look to AIDS also spread from primates, from monkeys to human beings. So the more we encroach on natural habitats, the more we have zoonotic spillovers. Zoonotic spillovers are spillovers of viruses from animals to human beings. It's a sustainability issue that then becomes a public health issue. So the more we encroach upon the planet, the more we diminish our planetary carrying capacity, the more we have to deal with these kinds of sustainability challenges, whether it's pandemics, climate change, air pollution, which is what we're dealing with in Delhi right now, congestion, traffic, all of these become really important sustainability issues. But let's talk about climate change. You all know this, it's on the headlines of every newspaper. If you look at carbon emissions are at record highs. We have not seen carbon emissions of 422 parts per million for the last 250,000 years. So you can't destabilize natural systems to this extent and not have impact. The impact that we are having is global average temperatures are increasing. So since pre-industrial levels, global temperatures have already increased by 1.1, 1.2 degrees centigrade. The prediction now is that by about 2030, global average temperatures will increase by 1.5 degrees centigrade. And from there on, at COP27, which I will be going to tomorrow, at COP27, the United Nations Environment Program has already said under current policies we are going to 2.8 degrees centigrade. Now, those of you who are like me, engineers and quantitative, will enjoy the following little calculation. In 220 years, we have increased temperatures by 1.1 degrees centigrade. The gradient is 1.1 over 220. Now, in the next 80 years, we are going to increase temperatures by a further 1.5 degrees centigrade over 80 years. The rate of warming is accelerating. And that is going to have unprecedented, cataclysmic impacts. This is the data that's been put together, which is that, we would like to be able to get to net zero by 2050 globally, but we are nowhere close to that. Current predictions, 2100 warming projections, somewhere between 2.5 to 2.9 degrees centigrade. This is the best analysis that was done before COP27, and COP27, of course, UNEP has come out with 2.8 degrees centigrade is what they're expecting. So as far as climate change is concerned, as part of this very important aspect of sustainability is concerned, friends, we are nowhere close to where we need to be. Nowhere. Now, even as global average temperatures are increasing, we are rapidly starting to approach certain very important climate tipping points. Whether it is the melting of the Arctic and the Antarctic ice sheets, Coral reef die-offs, coral reefs are dying. If you haven't been to Australia to see the Great Barrier Reef, I would recommend you put it on the bucket list. People are not sure how long more we're going to have the Great Barrier Reef in Australia. If you're going to the Maldives, forget it, the coral reefs have already died. We are very worried about what's going to happen to the Atlantic current, glacial melting, permafrost melting. All of this is going to trigger runaway climate change, and all of these could interact with each other in a very unpredictable way. People are worried that this might happen at 1.2, 1.3 degrees centigrade. Forget 2.8. So the combination of these climate tipping points with the temperature increases that are going on right now is putting us in a zone of extreme climate uncertainty. We have no idea what's going to happen over the next 20, 30, 40 years. We have no idea. And to give you an example of that, let's talk about the flooding in Pakistan. So in April and May, as you know, we had the highest recorded temperatures in South Asia in 122 years of recorded history. In April and May. And what did it matter to us? We just said we'll crank up our air conditioners in April and May. We are used to 45-degree temperature in June. How does it matter? Just crank up your AC. Now in Jharkhand it did matter because we had blackouts. But in Delhi we got through it, 45-degree temperature, crank up the AC a month earlier. However, what we had not anticipated, and that's why I say that we are going to have this extreme level of climate uncertainty. We had a tremendous amount of glacial melting happening in April and May, which no one had anticipated, because obviously it got warmer earlier, there was more glacial melting. In Pakistan, there was also a massive amount of excess rainfall in July and August, because in Balochistan and in Sindh, they had 4x, 5x the amount of rain they normally do. The Indus was full. The Indus River had already started overflowing its banks because of glacial melting. To add to that, we had this excessive rainfall, and now a third of Pakistan was underwater. Thousands of people died. It set back development in Pakistan by several years. Now, what happens in India if you have a flooding of that same scale and magnitude? Can you imagine the impact it's going to have on microfinance as well, but in all of us? So these are the kinds of risks that we are going to face when temperatures go up by this much. And of course, extreme weather events, with cyclones, droughts, all of these are becoming more frequent. We know that. We know that temperatures have increased dramatically. This is a picture of in South Asia on April 29th, where temperatures were reached that we don't normally reach at this point. Tremendous warming, 46-degree temperature had already been reached in Rajasthan in April. And I'll just pause here for a minute and tell you about sea level flooding. This data has been developed by MIT. It's just been published. So the forecasts are with sea levels rising by somewhere between 0.5 to 0.8 meters under current predictions of average temperature increase and melting of ice sheets. Sea level is going to rise by 0.5 to 0.8 meters. We will have more frequent cyclones with storm surges of 2 to 3 meters, and therefore there is a high expectation of coastal flooding. So I don't know how many of you own Bombay real estate or Calcutta real estate. All of that is going to be at risk because of this level of coastal flooding. So from a sustainability point of view and from a climate change perspective, these are very serious challenges that we have to start to prepare people for. We have to start to prepare the microfinance industry to deal with the adaptation and mitigation issues associated with this level of climate change. And this is going to impact agriculture, which is what microfinance organizations deal with on a day in and day out basis. So as droughts increase, as heat waves increase, as temperature increases, there are predictions that indicate yields are going to drop by 8 to 20% for our major cash crops and our major grains. So these also we have to take into account. We have to start to think about insurance. We have to start to think about how we cushion people and buffer them from this kind of uncertainty. And we're seeing again in Jharkhand, we've had many more droughts in the last few years than we've had before that. So clearly the variability in weather patterns is increasing dramatically. Now, even as we confront these climate change issues, and this is part of what I'll be discussing when I'm in Egypt from tomorrow onwards, is that we have to start to take action now. Your organizations, microfinance organizations, have to start to take action now, because if we don't get on a net zero trajectory soon, it'll be very difficult for us to bend the curve later on. It has to happen now. This is not tomorrow's problem. We can't kick the can down the road. We've been kicking the can down the road since Rio in 1992, 30 years ago. So we had 30 years of kicking the can down the road. It's now time to stop that. We've got to take action now, because if we put in place the diesel generators, the coal-fired power plants, the petrol vehicles, now they'll be around for 20 or 30 years. For us to get onto a 2070 trajectory, which is what the Honorable Prime Minister has announced, we have to start to make changes now. That's what all the modeling, all the work is showing us. So this is an emergency, this is an urgent set of actions we have to take now. And as we do that, let's also recognize the other challenge that we face right now. And this is the Bhola Mehto challenge. So Bhola Mehto is one of my voters from Tati Jharia. तो अगर मैं भोला महतो जी से कहता हूं कि भाई आपकी सबसे बड़ी क्या चुनौती है, आपकी सबसे बड़ी जरूरत क्या है, तो भोला महतो जी कहेंगे कि मुझे रोजगार चाहिए, मुझे अच्छी एक नौकरी चाहिए, और मुझे किसी ढाबे में नहीं काम करना है, ना मुझे किसी कंस्ट्रक्शन साइट में काम करना है. आप मुझे कोई सरकारी नौकरी दीजिए, अच्छी कोई सरकारी नौकरी दीजिए, या बैंगलोर में जाके मैं आईटी सर्विसेज में अच्छी नौकरी एसी चेंबर में मैं करना चाहता हूं. So the need for high quality jobs for our young people is a very big challenge that we have to confront, even as we are dealing with these sustainability issues. And to that end, let's also recognize that of the 500 million people or so in our workforce right now, 400 million are in the informal sector. These are the people that we deal with in microfinance. They are in the informal sector. They are not sure that they're going to get a payment and what their payment is going to be every month. We only have about 100 million people in the formal sector where they get PF, they get their salaries. And we have another 200, 250 million people coming as well. And this is the fallacy. मैं जहाँ भी जाता हूँ सब लोग बोलते हैं सरकारी नौकरी दिलवाइए सर. पर सरकारी नौकरियाँ हैं ही कितनी भारत में? आप देखें तो आज के समय 3.5 करोड़ सरकारी नौकरियां हैं, 35 मिलियन. तो इतने सारे लोगों को हम लोग सरकारी नौकरी कैसे दिलवाएंगे? हमें इन्हें प्राइवेट सेक्टर में इन्हें नौकरी दिलवानी है, या उनको स्वरोजगार दिलवाना है, उनको सेल्फ एम्प्लॉयमेंट दिलवाना है. दैट्स वे वी हैव टू फोकस आवर अटेंशन in the MSME sector, in the self-employment sector, and in the corporate sector. That's where the jobs are going to get created for all the young Bhola Mehtos of the world. अब हम लोग ऐसा तो नहीं कर सकते हैं ना डेवलपमेंट मॉडल की भोला महतो को हम लोग कहें कि आपको नौकरी चाहिए तो चलिए आप ऑटो रिक्शा चलाइए. If we look at the development model right now, this development model would suggest that we take a Bhola Mehto and we have him drive an auto rickshaw in Ranchi from a Tati Jharia. The problem is, of course, when we do that, ladies and gentlemen, we just continue on the current unsustainable path that we're on. We've got to rethink job creation. We have to rethink our development model, because the way we are going right now, it's not going to be sustainable in the long run. So let's think differently. Can we, as with microfinance supporting us, can we find ways in which we can take Bhola Mehto from the farm where he's making 7,000 rupees a month, not put him in an auto rickshaw making 15,000 rupees a month, but instead find for him a green job, a proper high quality green job using digitization so that he can make 30,000 rupees a month. Now what if he was driving an electric vehicle making 30,000 rupees a month with a car that is not putting out any emissions? Can we create green jobs for Bhola Mehto? Can microfinance help Bhola Mehto get a green job? Can we finance a green electric vehicle for him? Can we finance an e-rickshaw for him? Those are the things we need to think about as we think about job creation. And if we do that, coming back to my framework, if we do that, instead of being on the current path that we are on, which is not a sustainable path, we will get on what I call a net zero pathway, the green frontier development. So the idea of green frontier development, of course, is that we have to transform the way we think about the economy. We have to change our power sector. We have to make the power sector totally green. We have to get to 100% electric vehicles as soon as possible, which is a very big opportunity for microfinance, by the way, because we'll have to finance all of these electric vehicles and we'll have to really make sure that that transition happens quickly. We'll have to focus on a number of disruptive technologies. And I think we need a global carbon trading system. There's a discussion going on that already in Egypt, and we will continue to have to do that. So India needs a different development model. It cannot be a farm to factory development model. It has to be a farm to frontier development model. And instead of industrialization and urbanization being the two vectors that drive it, I think the two vectors that drive it have to be digitization and decarbonization. So digitization and decarbonization, that's at the heart of the Green Frontier Development Model. Microfinance needs to contribute, needs to be at the front of this change in our development thinking, because we have to create more green jobs. That is core and absolutely important to our development. So this is the way it will actually work then. Instead of this current path, we've got to innovate. Microfinance has to innovate. We've got to get to the green frontier, and we have to create the companies. We have to create the companies that are going to be at the green frontier. The good news is we already have a host of companies. How many of you have sat in a Blue Smart car? So we already have many people here that are using Blue Smart. Blue Smart is a 100% EV fleet. Their employees are on salary. They're making 30,000 rupees a month. And they are obviously a zero emissions company. Similarly, we have Ether, we have Electric Pay, we have NutriFresh, we have Chai Point. We have a number of different companies now that are really pursuing decarbonization. And decarbonization for them is at the heart of their business model. Digitization is at the heart of their business model. Not industrialization and urbanization. It's not about setting up a textile factory in Bangalore. It's about finding ways in which we can create business models that have digitization and decarbonization at the heart of what they do. That's the Green Frontier Development Model. And if we do that, ladies and gentlemen, we've done a tremendous amount of modeling with expert groups in India and around the world on what does a net zero trajectory mean for India. And a net zero trajectory for India, and this is my big headline, is net zero. Net zero is net positive. Net zero is net positive. The view has always been that if India gets on a decarbonization pathway, we will not have the carbon space. We will need the fossil fuels to be able to develop. But all the modeling is telling us now that if we actually move away from fossil fuels, we are much better off. So net zero is net positive. We have to get on a net zero trajectory as soon as possible, and that will improve what we're doing. And we can see that in the data. This is just, I'm going to very quickly go through these slides, but GDP is better when we move on a net zero trajectory. We create more jobs because green jobs are more labor intensive than brown jobs. So we create more jobs in net zero. We reduce air pollution. Of course, we are dealing with stubble burning right now, but 60 to 70% of air pollution in India is driven by fossil fuels. So by shutting down fossil fuels, we are going to clean up our air. What's not to like about it? We'll save millions of lives by doing that. And here's the punchline. Today we are importing $250 billion a year of fossil fuels. $250 billion a year. Of our import bill of $600 billion a year, we have our friends from RBI here. They understand our balance of payments very well. Out of our $600 billion of imports, $250 billion a year is fossil fuels. And if we continue on the trajectory we're on, we'll be importing $1 trillion a year of fossil fuels. So going to green is going to be tremendously good for our fossil fuel imports. The RBI is going to have a difficult time doing foreign exchange management because there'll be so much pressure that we will relieve by moving to a green development model. So that is why this is so much better. And there are a whole host of green frontier jobs. It's not just that we have to put Bhola Mehto into an electric vehicle. If we have dairy processing, efficient dairy processing, we can create a green job for Bhola Mehto in his farm itself by putting him into a high quality, high value add dairy processing plant. Instead of him supplying you with milk, what if he supplies you with ice cream? So we have to think about these kinds of jobs, solar powered green frontier jobs, and at the same time, and this is again where Sa-Dhan and all the microfinance organizations have a very important role to play. It's not just about Bhola Mehto. It is also about Geeta Oraon and Patratu. I want Geeta Oraon also to have a great job. And we can again do that with new and better forms of sustainable agriculture, like NutriFresh is doing with hydroponic farming, for example, outside of Pune. So can we find models for sustainable agriculture where people like Geeta Oraon can have better jobs? We have to really reconceive and rethink, not be incremental in our thinking. Not be incremental in our thinking. And if we can do that, folks, we will be well on our path towards net zero. Now, here's the punchline, and this is where the financing part is so important. As you run these models and ask yourself what is required for India to get onto a green frontier development model, the real requirement is finance. The real requirement is money. We have to incrementally invest, and Mr. Vaidyanathan is going to love it as a financier. We need trillions of dollars more of finance. Trillions of dollars, incrementally from where we are right now. And the requirement, everybody here in the finance industry should be really happy, because the requirement is that from $100 billion of corporate capex, which is where we are right now, Mr. Vaidyanathan, $100 billion of corporate capex, we have to immediately increase that by another $100 billion so that we can get on a net zero trajectory. And so at the heart of sustainability, at the heart of climate finance, is finding a way to marshal this level of funds flow, $100 billion incremental a year, and through microfinance organizations, finance organizations like the one Mr. Vaidyanathan runs, to be able to channel that to these green jobs, to sustainable agriculture, so that we can pursue a completely different development model. Finance is the key to this, because we need trillions of dollars of additional wealth. Now, I don't know how many of you have seen the movie Jerry Maguire. Have you seen Jerry Maguire? Anyone seen the movie? So in Jerry Maguire, there's this really funny scene where the football star tells the sports agent, I need more, right? I don't know if you all remember that. But that is what is happening in Egypt right now, okay? So we have the global south saying to the global north, I don't know if you can hear this. We can't hear this, unfortunately. But it basically, this is a very funny scene where he's telling Jerry, show me the money. I don't know if you all have seen it. But it's a very, very funny scene where he's saying, Jerry, show me the money, right? And this is exactly what's happening in Egypt right now, because the global south is saying, I want you to really deliver the money to me. And he says, okay, I'll shout it out. He says, no, you got to really, really shout it out very, very loudly. And of course, then what happens is that Tom Cruise in this particular, show me the money. He says, do it faster, louder. And by the way, Cuba Gooding Jr. won an Oscar for this. So he shouts out, show me the money, and basically that's what it's about. Unless the global north, which has surplus capital, is able to give us trillions of dollars for this type of green development, folks, we are not going to be able to deal with our adaptation and our mitigation challenges. And it's not just India. India is just symptomatic of the global south. The global south needs $1 trillion a year. $1 trillion a year. And that's why, we need to build a whole climate financial system, which is a market-driven system, where money comes to IDFC, money comes to Sa-Dhan and Sa-Dhan's members, and from there it goes into all of these different green jobs, all of these different green businesses, so that we can actually pursue both adaptation and migration measures. And I'll conclude by saying that as far as India is concerned, we have a historic opportunity. The Honorable Prime Minister created the International Solar Alliance, coming out of Paris in 2015 after the Paris Agreement. India is assuming the G20 presidency coming out of Bali. The Honorable Prime Minister, in fact, has just gone to Bali right now. We are going to be assuming the G20 presidency. It is time for a global climate alliance. It is time for a global climate alliance where these trillions of dollars of capital can flow from the north to the south. If they don't, folks, we are not going to be able to stop global warming from continuing. As I said, we are already at 1.1, 1.2 degrees centigrade. Summers in Delhi are already becoming very difficult. We are getting these extreme heat waves already. If we go to 2.8 degrees centigrade, we can't even imagine what Delhi is going to be like. We can't even imagine the kind of coastal flooding and the kind of impact that is going to happen to agriculture. We absolutely need to have a global climate alliance where, in return for the global south committing to net zero, the global north commits to trillions of dollars of capital flowing from the north to the south. And unless we really strengthen our financial system and all aspects of our financial system, whether it's commercial banks like IDFC, whether it's microfinance institutions, unless they're scaled up to being twice what they are right now in terms of their intermediation function, in terms of all the credit underwriting capabilities, all of these different aspects of running a financial system, we have no chance of being able to deal with the adaptation and mitigation challenges that we face. This is the reality. So we have a very difficult road ahead over the next 20, 30 years to be able to cope with all of this. I think we are very well equipped at Sa-Dhan to have microfinance be a very vital and important part of this whole endeavor in going towards a green development model, a green frontier development model. And I'm extremely hopeful, based on the wonderful foundation that Sa-Dhan and all of you have built over the last 25 years, that we will not just be equal to this challenge, but that we will surpass this challenge. We owe it to our children and our grandchildren. Thank you very much for giving me this opportunity. Thank you.
Well, thank you very much, Shri Sinha, for talking to all of us here. It is indeed an honor and privilege for all of us to have you on our today's program. And thank you once again for that very comprehensive address. Thank you once again. And it's time for me to now invite, for a very special note, Mr. V. Vaidyanathan, MD and CEO of IDFC First Bank Limited. Please welcome him with a round of applause.
Thank you. How is it flashing there? Presentation there. Good morning, ladies and gentlemen. Mr. Jayant Sinha laid out the roadmap so very beautifully and told us the importance of climate change coming in front of us, members in the dais and everyone else this morning. Now, I have put together a very quick note for all of you this morning, because I was among the earliest and the inaugural speakers. I just thought I will present to you very quickly what the current context of the microfinance industry today in India is. One is the market is about 2.9 lakh crores or 2.9 trillion rupees, 37 states, union territories, 195 lenders, 600 districts, 121 million active loans. I'll talk about the importance of this later. 60 million unique active customers, average balance per customer around 46 to 50,000 rupees, collection percentage returned to pre-COVID levels. Banks are about 36% of the market, NBFC, MFI 34%, SFBs 18%, and other NBFCs who are not NBFC MFIs, but other NBFCs are non-profits 12%, and basically about 2.5 lakh people employed in the sector. Now, just keep that context in mind, and I want to just quickly tell you that this 3 lakh crore loan book has been achieved just in 20 years. And I need to just think about it for 2 minutes about the importance of that. Remember, this is not like home loans or car loans or like a home loan, a 20-year loan where you can build a loan book. These are short-term loans, 12-month loans. And with 12-month loans, if you're building a 3 lakh crore book in 20 years, you know that this is a tremendously successful industry. Really it is. And 60 million unique borrowers. It just shows that there is something that is powering this industry, and today we'll talk quickly about that. What are the key reasons? There are maybe 3 or 4, and I'll put them one by one. Number one is demand. What it clearly shows to all of us that at the grassroots level in the country, there is, each of the 60 million people are running some micro business. It could be in the informal sector, it could be maybe making agarbattis, or maybe shoes, or maybe whatever in the respective informal sector. But the point is that each one of them are running some enterprise there, and there's a demand for this money. Number two, if there's a demand, it doesn't mean that by definition it would get met. If that was so, then this microfinance kind of lending got discovered through group lending or joint group lending, why was it not created? So clearly,
there is a very significant force that is playing at the back of it to make it live, to support this demand. And that is one of the key factors, I would say, is the fact that the Reserve Bank of India came out with some norms that was very, very progressive for this industry. I tell you, without Reserve Bank of India's push, support, both moral support, soft support, hard support, this thing could not have been built. For example, one of the key features is that this has a priority sector lending status. Now, I showed you earlier here that the NBFC MIs is 34%. Now, 34% of 3 lakh crores is about 1 lakh crore. Now, which means 1 lakh crore has been lent by the NBFC MFIs, and maybe another 12% through the NBFCs. Now, that 1 lakh crore, let us assume that even 20,000 crores has come in the form of equity, which those MFIs have raised. But still, 80,000 crores has come probably from banks, or maybe 75,000 crores, or from other sources. Now, if that sort of money has been brought here, the availability or having called it a priority sector is a significant factor. We have been lenders to this sector really for close to about 12 or 13 years now. In our earlier avatar, it was not even, when we were capital first, we did not even have the priority sector requirement. We were lending it as a business, and we just like the sector. We like the fact that we like the underlying economics. But even as a bank, as we speak around, the priority sector makes a big difference. And every one of you should really thank the Reserve Bank of India on this very big support that we have got over the years. The third factor, if I may put it so, is that we talked of raising about 1 lakh crores in the banking system, despite this being a relatively riskier business. And we often talk about the underlying borrowers in this sector also as a riskier segment. Of course, nobody can deny that. They are relatively more vulnerable, and the economic crisis that like a COVID, etc. comes, of course, they get more affected than large corporates, etc. But when we call it riskier, it's rather ironical that like close to about 20 years have gone by, there have been 3 or 4 significant crises, right? We all remember that the Andhra Pradesh crisis somewhere in 2010. Then we remember the demonetization was an extraordinary crisis because of the fact that cash literally vanished overnight. And of course, they all come back. Then we know that the COVID happened. Then that was a big crisis, maybe 3 or 4 significant, and then the Assam crisis. Now, after all of these crises, in this sector, collection bounces back to 99.5% to 99%. After every crisis, it also shows the extent of relevance of Jiji, concentrate, Jiji, one second. So, it also shows the relevance of the speed at which this industry really bounces back, and it also shows the underlying economics are really so strong. That's very important. Underlying economics are so strong that people are able to pay back. I must show you here that this is very important. This is why I requested you, Jiji, for your attention, because, and this is very important since you're a spokesperson for the MFI industry. Now, if you see here, this is the CIBIL report, CIBIL TransUnion report, and clearly you can see that the NPA in the personal retail segment is really the least. Of course, you give a home loan or a car loan or a personal credit or a credit card, they are the least because individuals are very particular about their own credit bureau score. The next is small and micro enterprises. If you see here the graph chart, this got the lowest delinquency. NPA of mid-corporate is the graph above that. And NPA of the large corporates is higher than that. So, and really, this is very important for us to note. And this is despite the fact that we call them the so-called vulnerable. And this is the August 22 report of the SIDBI CIBIL report. Now, therefore, it tells us a story that, or it leaves us a message that the small customers, because they have strong underlying economics, because they're diversified, and also because small entrepreneurs are by nature small, or by nature, if you meet many of them, I can show you some people whom we met here, and in fact, I personally met so many of them. I was really blown by the extent of commitment they have to repay. You know, these people are here, all of them, you can see here raising the hand like this. They're actually in a group meeting, and it's a kind of ritual our organization runs when we are talking to them, and they're all, it's a promise to pay, right? Now, I can't see this, any of the larger corporates having many of these things. Of course, they're fundamentally stronger, and we need to support larger corporates also. No, let me not question that. It's important. But here we're talking of the context of these small micro entrepreneurs. They have the intent, as you can see here. They have the ability. You know, we understood for each of these 30 people, we understood their underlying economics of the business, and you'll be surprised that they were all making enough money to pay you back. It is not a miracle, therefore, that 20 years have gone by since the time this was created. Average credit loss, even factoring for, this is very important, even factoring for the extreme crisis that happened, the 3 or 4 of them we talked about, even factoring for that crisis is not more than 1%. So if someone is paying a 21, 22%, having a 20-year track record of not having more than 1% credit loss, how do we call them riskier customers? At least the track record of repayment doesn't seem to suggest that to you. Now, what is even more important from the MFI market point of view is this, that traditionally when lending was done, and this has been going on for the last hundreds of years, when lending is done, we look at 2 things. We say, show me your income. I need to see your income tax return, of course, income tax return. Or I need to establish cash flow in your bank statement so that I can lend to you, which is a more newer form of lending these days. We're all talk of cash flow lending on the basis of GST tax return or bank statement or cash in the bank and so on. This sector is not lending by that basis. They are lending on the basis of certain group guarantees, which is a completely lateral way of thinking. And as long as you insist either on security or on income tax return or on cash flow, you could never lend to any one of them, not one of them. This entire 3 lakh crore could not have been lent at all. And by the way, all these people would be maybe somewhere troubled in their respective lives. So therefore, this industry literally, and Jiji, you should note this as a spokesperson for this industry, has literally discovered a new way of lending other than income tax return and cash flows. Of course, you do cash flow assessment, but you're not seeing the cash in the bank, right? So this is because, it's like a chicken and egg story. The chicken and egg story is that I can't see the money in the bank, I can't see IT return, so I can't lend to you. Okay, I can't lend to you, you can't start a business. If you can't start a business, therefore, there's no cash flow, so I don't lend to you, it's a cycle. So this industry has broken the chicken and egg problem, which is a really huge achievement, and not just academically in some research laboratories and universities. It's really working with some, 60 million people having borrowed 3 lakh crores. The next important thing to note is that other reason for success is the SRO. Because in this industry, when things were started initially, there were people are concerned about the practices, collection practices, and so on and so forth, how much a debt burden, etc. There again, both MFin as well as Sa-Dhan, etc. All of you put together certain norms about how you should lend, how you should collect, etc. I think it really brought a lot of sanity to the process. And of course, in the recent set of norms, the RBI also has brought a lot more guidance to this process. They've come out with the debt burden ratio norms. They've deregulated, or let me say, made more market-oriented interest rate processes and so on. So I think that there's a lot more reform coming from the RBI, self-regulation, etc. All that has definitely helped. The other thing is bureau. Now, that's probably the 5th reason for success. We talked about the RBI, we talked about the level of entrepreneurship, we talked about SRO, we talked about enterprise. See, we talked about bureaus. So 5th is bureaus, because now, of course, we got CIBIL, TransUnion, we got Experian, we got Equifax, we got CRIF. So we got all of these bureaus coming about, and that makes also lenders that much more stable, safer. When you lend to someone, you can see all the track record and so on and so forth. Finally, I'd just say that what is the specific value add brought by MFI? I think they're basically adding capital to capability, because lots of the people see here, you will find that they really have all of these people have enough capability. When you go to them, they all have drive, they all have energy. At least I talked to many of them, and every one of them said that, I want to buy this, I want to buy a car. Why do you want a car? Because I want to transport children from school to office and so on and so forth, or school to the residence. Someone wants to buy a bus, someone wants to do something. But if you talk to them, understand underlying economics, all of them seem to have a very strong economic model, which is why they can pay back. And, empirical data, how much ever you're, mistrusting of these processes, you can see that for 20-year track record of not having more than 1% credit loss adjusted for all the cycles, just talk the fact that there is underlying economics that is working here. I want to just close by now saying that what is the way forward? Now, there are many people have different thoughts about way forward, but let me just say that one of the big ecosystems that coming in front of us is the digitized ecosystem. We are all seeing that. We can see how the consumer companies are going electronic, and gaming companies are going electronic, and education is going electronic, and banking and financial services, everything's going electronic. So therefore, obviously, MFI industry cannot be left behind. And I do think that at least as far as the ecosystem is concerned, it has evolved for the better, no doubt. It has become more climate friendly. Of course, Mr. Jayant just pointed out this morning that it's not enough, but at least to the extent that agreements doesn't have to be any more on paper, to that extent, because it's e-agreement, to that extent it has become that much more climate friendly. Now our identity is not like us, nobody's giving a physical copy of a passport or a license, etc., because even that photocopying is bad for the climate, and it's paper. So to that extent, that has become electronic, it's become more convenient. Let me just say that the whole process of dispersal is no longer that it's coming physically, it's not getting couriered. When it's getting couriered, I assume some aircraft is maybe couriering the document and some burning the fuel. So that has also become electronic, it is coming there. The person who's booking the loan transaction is also now not really looking at a physical paper and verifying anything, it's all coming digitally. So the whole process end to end is all becoming very, very digital. To that extent, it's great for India, great for community, and great for the world. So that is becoming, and I think that is one ecosystem the MFI industry has to more and more absorb. I'm actually very happy to see that this entire process and even the MFIs have become fantastic by now. Everybody is now crediting the customer accounts. Nobody's giving the loans now anymore in cash. I've talked to lots and lots of you. I don't think any one of them is actually giving customers in cash anymore. That's a great progress by everybody. But I do think one area that is still not entirely addressed is actually the area of collections. Because collections, all of you are still sitting in a center like this and collecting cash. I've done the discussion, many of you, somebody's 90% collecting cash, somebody's 95, somebody's 98. But somewhere in that order of magnitude, nobody's reached 3% or 98% through electronic. Because you say all of the people are collecting in the informal economy and they're all cash and they can't go 30 kilometers away to put the money, and they're stuck with all these kind of cyclical problems. But now that the UPI has come, we must figure out some way how these people who go and sit in the center and maybe collecting this cash, all these people can maybe pull out the wallet, maybe, or pull out the mobile. They can pay you through UPI so that you're not really touching the cash. If that's something that can be achieved, or maybe they can load money into a wallet and we can take out money through the wallet, and some settlements mechanisms can happen, or maybe the RuPay cards, which is great for India, can come up and that can make things happen. Or the central bank digital currency that's coming up. Hopefully that can be a very, very, very big game changer, and maybe that can happen. But somewhere this entire collection mechanism has to become more and more digital, and I think it's really worth, among the many panel discussions you're going to run today, to have a very, very focused discussion that how the MFI sector can start collecting digitally, not disbursing, that you're already doing. Collecting digitally, if you can make that, that'll be a very big breakthrough. If that happens, your collection costs are going to drop. That 6.7% that Jiji shared earlier is the cost of operations of this business. That can come down by a factor, and that can then be used by the industry for many other positives, either for profitability or raising more equity, or maybe many other things that you could do with that money. Last thing I should say is that even among the last thing I would say to be achieved, because as India grows, as part of this ecosystem, you are actually going to see a large number of progress coming from, let me say that you're going to see progress coming from ONDC. Now with the ONDC, all the small micro entrepreneurs will start earning a lot more money than before. Because what will happen in ONDC, literally every nearby Kirana shop will become will be able to literally sell their goods virtually. For example, you can order on ONDC through the buyer app, and the seller app will actually give it to the nearest merchant who will come and deliver to your home. You're not really ordering from Amazon, it is coming from somewhere else. So that can fire up local ecosystems in a very big way, and that's very powerful, very, very insanely powerful what India is building at this point of time, because that can increase the income of the local micro entrepreneur. That's great for our industry. With the new digitalization capabilities coming in the form of account aggregator, you will be able to see much more reform. With GST coming up, a lot of digital trails being left behind. That's very, very powerful for this for the ecosystem you're building here. Like that, and as it is when India will start growing towards a $6.77 trillion economy of 2030, by that time, a lot of money will go down. The DBT is a very big deal because people will start getting cash in the bank accounts much more than before, and that is very powerful for the ecosystem. So there are a lot of powerful things coming in the digital, and the microfinance industry has to figure out how they will really stay in tune with the new digital ecosystem. That is very, very, very important. If you're out of tune, you will not benefit from that ecosystem, and it'll pass you by. And lastly, of course, as far as the employees are concerned, there's 2.7 lakh or 2.5 lakh employees who are working in the sector. Really, their lives can also be very much transformed if we give them behavioral skills, because many of them are coming from rural, small locations where they barely have they barely from the formal even education. Some of them, how to actually make them much more, bring them to the formal managerial skills so that they can grow. They don't have to just be a collector of cash all their life, how they can become managers in their life, how the dormitories can be improved so that, I went and saw some dormitories, when I went in one of my earlier visits, and I saw the dormitory was not great. I said, okay, let's upgrade the dormitories. They can live a better life, and they can serve customers even better if they're feeling more happy and peaceful in their lives. So, how to improve the employee life ecosystem with their kind of quality of life and the skills and the training and the managerial effectiveness, behavioral skills, all that, how we can improve. It's not about customer, it's like employee, which will then, of course, reflect in the way they're taking care of our customers. So I'd just say that these are the many things that maybe the industry will have to work upon. But if we do, it's a very, very big opportunity coming in front of all of us. Thank you very much, ladies and gentlemen. And sorry, Jiji, for that comment. I just needed you to hear this because you're a representative. Thank you very much. Thanks, everybody. Really nice speaking to all of you. Thank you.
Well, thank you very much, Mr. Vaidyanathan, for talking to all of us here. And now for the keynote address, I'm going to invite Mr. Anil Kumar Sharma, Executive Director of the Reserve Bank of India. Let's all welcome him, ladies and gentlemen.
Thank you. I spent half the time yesterday trying to fit my speech into the time I thought I had available to me. And now I think I'll have to shrink the speech to fit into the time that I don't have. Shri H.R. Khan sitting in the audience, friends on the dais and friends in the audience. I'm very happy to be here for this, it's called inaugural speech on this conference. Thank you very much for the invite. And let me tell you, asking the regulator to shorten the speech can have unintended consequences. Okay, but I'll make an attempt. I'm looking at the paucity of the time. Please bear with me. I'll briefly touch upon the steps we have taken in the last many years. In fact, I intend to go back pretty long. For furthering financial inclusion, what are the barriers both on the demand side and the supply side which are holding it back from where we should be, and what steps we are taking, briefly. Microfinance institutions came on the scene in the late 80s, early 90s. But the initiatives to achieve financial inclusion or bring excluded sections into the financial sector started way back in the 1950s with the promotion of cooperatives, followed by the nationalization of banks, followed by the lead bank scheme, and the rapid branch expansion that you're all aware of. We also set up the RRBs in the 70s. NABARD was set up in the early 80s to focus on these areas at the apex level, and we have come a long way. A lot of interventions also happened during this period of time. We started with the SHGs were there, SHG bank linkage came, KCCs came, JCCs came, BSBD accounts came, banking correspondents came. The person who is responsible for the banking correspondent is sitting in the audience, Mr. Achar Khan, who was heading a committee which recommended BCs. And the definition of banking outlet came. BSBD accounts, as I said, came, no fields account, as we used to call them, and the PMJDY as a campaign came. So all these initiatives and interventions are known to you. A subset of regulatory interventions also happened, apart from these broad interventions. For example, permitting the informal entities for becoming the customers of the banks. For example, allowing collateral-free loans. For example, allowing a component of the loan to be taken as a consumption loan. So these were all subsets of the interventions which also happened. And all this have brought us to a situation where we are today, which is not very bad actually. The MFI sector started growing, as I said, in the late 80s, early 90s, and by the turn of the century, it was growing very fast, as you're all aware of. And we as regulators had a number of concerns in terms of the multiple loans being given, the level of the indebtedness in the borrowers, the rate of interest that was being charged, and the recovery methods which were being pursued. And we set up a committee, in fact, a subcommittee of the board of the Reserve Bank, headed by Mr. Malegaon, which made recommendation in the wake of the Andhra Pradesh microfinance crisis of 2010, which made a number of recommendations, recommending setting up of an NBFC MFI as an entity, putting limits in terms of the loan which can be given, the rate of interest that can be charged, and so on and so forth. You are aware of all that, and some sort of order came to the sector. But the sector grew and continued to grow. But the concerns which the regulator had, they persisted in one form or the other. And we also had a situation where there was a fair amount of regulatory arbitrage. All the entities which were giving microfinance loans, they had different regulations applicable to them. So to address these concerns, including this regulatory arbitrage, we've come out with a new framework for the microfinance in March this year, which you are aware of, primarily centered around the consumer protection, on the principle of entity-based regulation, and inbuilt mechanisms to ensure there is no overlending and there is no overcharging. So I hope this particular framework going forward will guide the sector in a much better, to a much better future. The share of the microfinance sector, since this is the microfinance conference, stands at 35.8% as of today. Looking at the theme of the conference, greater gender equality is a requirement. It's important for the entire financial sector in the sense it should be fair, it should be equitable. The development has to be sustainable, and also if the country has to meet the target of $5 trillion economy, $5 trillion economy. So bringing more and more women into the productive environment is going to be necessary. However, women, as we all know, face restrictions or the barriers both on the demand side and on the supply side, be it the restrictions on the mobility, be it the defined gender ratios, or be it the lack of awareness and literacy among them, especially financial in nature, which in turn leads to lack of access to resources, and which in turn leads to their inability to participate in the decision-making processes, and this vicious cycle continues. Financial institutions, this is on the demand side. On the supply side also, financial institutions also find it more comfortable to deal with the men-owned enterprises. They are more familiar with them in many ways. The high-risk perception which they have when they're dealing with an entity which is headed or run by women also is one of the factors on the supply side, apart from many other factors. Accordingly, various initiatives that we have taken, some of which I hinted at and some of which you are aware, which are currently being undertaken as well, they had women at the center. For example, promotion of the SHG, which started in the late 80s and picked up in the 90s by the SHG bank linkage program in a big way. More than 87% of the groups under the SHG bank linkage, they are women, they are primarily related to women, and which account for 89% of the loan outstanding and under the program. And the average size of the loan of the women SHGs is larger as compared to the non-women SHGs, which we know. I have some data which, for the sake of the paucity of time, I'll skip. But essentially, the exclusive women SHGs, they form 87%, as I said, of the number of SHGs and 89% of the loan outstanding. NRLM, National Rural Livelihoods Mission, the SHGs form 60% of the physical and 58% of the loan outstanding, and NULM, National Urban Rural Mission, 4.8% of the SHGs and 0.05% of the loan outstanding. So, and most of this data is available to you, so I will not spend more time on this. Day NRLM, which is the National Rural Livelihoods Mission, successor to this SGSY, which is primarily for the women in the rural areas, SHGs, women SHGs in the rural areas. It provides loans for the self-employment, and similarly for the, you have NULM as well. Now, Global Findex Database 2020-21 indicates that the gender gap in the account of the ownership has improved in the developing economies, falling from 6% to 9%, falling to 6% from 9%, and the women account ownership has improved from 26% in 2011 to 78% in 2020-21, which is quite encouraging. And the credit outstanding for the banking sector as a whole to the women entrepreneurs, which was around 5,37,000 crores in 2018-19, has increased to 8,36,000 crores as of today, that is March 2022, showing an increase of 55% over the last 3-4 years. So while the share of the women, but there are certain issues. There are certain issues that are still outstanding. There are certain issues which still persist. For example, while the share of the women in the PMJDY accounts is 55%, their share in the life insurance is around 31-32%. Similarly, while digital can be leveraged both on the supply side and the demand side for better and convenient access as well as the usage, especially in the case of women, because that reduces the need for them to travel. The gender gap still persists in terms of the mobile ownership, which is the gender gap is 14%. That is 71% of the women own mobiles vis-a-vis 83% for the men. And similarly for the mobile internet usage, it is 41%, which is pretty high. Affordability, which is the top barrier in mobile ownership, is closely linked with the economic empowerment. And as we know, that vicious cycle which works to prevent women from acquiring that empowerment, that works. And similarly, their share in making digital payments, of women's share in making digital payments also is 22% as compared to 35% for men. So while BCs can actually address some of these barriers and make it easier for women to avail financial services and make them accessible at their doorstep, less than 10% of the BCs are women. So these are some of the issues which still persist and which we need to tackle going forward, and we will. To address some of these concerns, both on the demand side and supply side, many steps have been taken, primarily addressing some of these issues which we have just flagged. For example, we have a national strategy of financial inclusion, approved by the FSDC, which has 6 pillars. Most of you would be aware of them, but just for the sake of bringing everybody on the page, I'll mention them briefly. Providing basic universal access to financial services is one pillar. Providing basic bouquet of financial services to all people who get associated with the formal financial institutions, access to livelihoods and skill development, financial literacy and skill development, grievance redress and consumer protection, and finally the effective coordination among all the stakeholders, because large number of entities and stakeholders are involved in this process. While this is not the occasion to discuss as to what has been the achievement status of various pillars and the milestones, I'll briefly touch upon some of the aspects which have direct bearing on what we are discussing. For example, universal access to financial services within 5 kilometers radius of a village or any hamlet with the 500 households in a hilly area, etc. This has been achieved to the extent of 99.9%. Some of the villages which remain still outside, which don't have the access, is primarily on account of lack of connectivity, with which we are talking to the stakeholders, including the telecom providers as well as the state governments concerned. So similarly, access to livelihoods and skill development is the second pillar. As on 31st March 2022, I have some data with me, that more than 33 lakhs beneficiaries have been sensitized through different skill development programs. Nearly 92% of the total beneficiaries were women, and approximately 42% of the total beneficiaries were either bank-linked or they were credit-linked. Similarly, DAY NRLM under the MORD has an initiative of engagement of women SHGs as BCs for providing basic financial services in the rural areas. And 54,000 women have thus been certified to act as bank Sakhis. Similarly, they have also signed with an MOU with the CSC e-governance of Ministry of Information Technology to engage women SHG members as Digi Pay Sakhis to provide services in the digital mode. Development financial institutions, NABARD and SIDBI are represented in the audience as well as on the dais. They also have a number of programs. In particular, I'll mention the Micro Enterprise Development Program of NABARD, and which primarily handholds and upgrades the skill of the women entrepreneurs for becoming an entrepreneur, and Livelihoods and Enterprise Development Program, which is starting from 2015, which primarily looks at the enterprise development in terms of hand-holding, cluster-based approach, collective training, and thereafter taking care of the forward linkages and backward linkages in the entire process, including upgradation of technology, improving the quality, etc., and design as well of the products which they make. So these initiatives and many more can address the barriers both on the demand side and the supply side which we have. Customer grievance redress and customer protection are equally important. In fact, I'll say that it may not be a good idea to include a person into a formal financial system if you do not protect from the harm which can come by wrongful association in various so many ways. So customer protection and grievance redress, which are bound to arise when the individuals deal with the various entities, that is important. And as you would be aware, we had different ombudsman schemes till a few years back. Last year, we've integrated all of them, and Prime Minister launched in November an integrated ombudsman scheme under which, under One Nation, One Ombudsman, any customer of any regulated entity which is regulated by RBI can log on to the cms.org.in and lodge a complaint against any entity which is regulated by RBI from anywhere in the country. Similarly, in the internal grievance redress, which is there in the regulated entities, because the grievance arises at the particular branch or a particular entity which is dealing with the individual, so the primary responsibility of grievance redress being of that regulated entity. Internal grievance redress also is sought to be bolstered, apart from various steps which we have taken, which I don't have the intention to go into. Internal ombudsmen have been appointed in the regulated entities, including NBFCs. Who will see a complaint which is thought to be rejected by the regulated entity before the customer or the consumer is conveyed of the rejection. For financial literacy is one of the most important aspects of furthering financial inclusion, because otherwise in the ignorance, the people who are included, they can come to harm in many ways. They can fall prey to various fraudulent practices which are there. So for promoting financial literacy, a large number of initiatives have been taken. For example, we've set up the Centers for Financial Literacy. We had set up a few years back, some 15 years back or so, the financial literacy centers at the district level, which were managed by the banks. But looking at the fact that they were not having the intended impact the way we expected that they will have, we have thought of, we ran a pilot in 2017 for 3 years in the tribal districts and the backward districts of the country, involving the NGOs, the bank, and Reserve Bank of India, involving the innovative and participative techniques for greater financial literacy and financial education. That pilot has done very well, and now that pilot is being scaled up throughout the country. We'll be covering the entire country in the ratio of one financial CFL for 3 blocks, broadly on an average. And we opened 1,112 CFLs last year, 500 we are opening this year, and the remaining, so as to cover the entire country, would be opened in the years to come. By 2024, we'll have the entire country covered by this. Financial literacy centers, as you know, they do conduct programs for various target groups, including women. National Strategy for Financial Education is a document which we have put in place, which primarily focuses on, it has a collaborative approach, focusing on the content, capacity, communication, community, and collaboration, 5C, looking at the number of entities and the number of issues that are involved in that. And it has a targeted approach. It delivers the targeted approach in the terms that it focuses on For example, women, it focuses on the housewives, it focuses on the students, it focuses on the rural poor, especially the farmers. Urban poor also are the area of focus. Senior citizens are the area of focus. So targeted approach, local language, and the 5C approach, which content, capacity, community, communication, and coordination, which I mentioned about. Similarly, most of you would be aware of so those of you who are not, I'll just mention in passing that we also in RBI conduct a financial literacy week. Every week in the first half of February, we identify a topic and there's an intensive industry, countrywide campaign in associating the regulated entities, banks in particular, on a particular topic. This year in February, the topic was Go Digital, Go Secure, and various aspects pertaining to digital transactions, including convenience of digital transactions, how they can be leveraged, and how to not fall prey to various fraudulent practices, and what are the do's and don'ts which must be kept in mind. They were also disseminated to the public at large. BCs, as I mentioned, could be one short answer to address what we have now with us is the last mile, both in terms of access, usage, and quality. BCs were expected to address this last mile decisively a few years back, but due to various factors, due to some regulatory restrictions which were there, due to some operational impediments which are there, and various other factors, they have not been delivered the way we expected them to deliver. So we are in the process of reviewing this entire BC framework, including the incentives which they get, whether they are viable standalone or not, the role of the corporate BCs, the services which they offer, the standalone BCs which are working, what are the issues with them, and the low level of women participation in the BCs. These are issues which we are currently engaged with, and we'll come out with a comprehensive set of regulations on how to revamp this particular issue, because this can actually help us achieve what we intend to achieve. Similarly, financial literacy weeks are all right. Financial literacy drives, RBI कहता है, you are all aware of, they are all fine. But essentially, if we can inculcate the basic financial education messages in the school curriculum, then that would be much better. Going forward, we will have the entire population which is financially literate in some manner or the other. So we have developed a content in consultation with all the regulators, which is being offered for inclusion in the state curriculum, education boards. All state boards except 3 have agreed to include it as and when their curriculum comes up for a revision. Going forward, we will have this curriculum, especially for the classes of 6 to 10, we will have this included. We also have come out with a financial inclusion index, some of you would be aware of, having 3 broad dimensions of access, usage, and quality. Which indicates as to the journey which we have covered so far and the road which we have. And as you would remember, the access was around 73 last, so we've covered quite a lot of ground in terms of access, but usage and quality were lower at around 50, partly on account of pandemic impact, but even otherwise. And that is where we need to look forward going forward, that we have to focus more. We have to some extent, or to a large extent, we have taken care of the supply side, but the demand side is where most of the action going forward will have to lie. And in achieving this, the barriers and the demand side factors which are still impacting us, digital way of undertaking transactions, digital way of imparting financial literacy and financial education, that is going to be of paramount help and importance for us. Accordingly, we started 2 years back the process of deepening the digital infrastructure in the district. So we asked the SLBCs throughout the country to identify at least one district in their state which can be taken up for creation of infrastructure for undertaking digital transactions. So 42 districts were identified, and they have been, to the extent of 96 and 98%, have been empowered of saving bank account and the current account for undertaking of digital transactions. A further set of 55 districts have been identified. And once they are fully, infrastructure is fully created in these, this process will continue, and eventually the entire country should have adequate infrastructure which will enable people to undertake digital transactions. Similarly, UPI 123 Pay, primarily for helping people in the rural areas and in particular women to undertake digital transactions without internet. The UPI Lite is there, which allows you to make small payment transactions without having internet. and Digi, which is a 24/7 helpline for issues related to digital payments and provide information, etc. These are all there, which are you are all aware of. So there was also a mention made of the open network for digital commerce, which is being launched by the Ministry of Commerce and Industry, which going forward can bring the SHG entrepreneurs, which are spread far and wide in the country. They should be able to move across and over and reach the markets which are not local, and which will bring the sellers and the vendors together. And they have the plans to include in 100 cities and 30 million sellers and 10 million vendors by the end of this year, December 22. So this will be a game changer for the SHG entrepreneurs going forward. So as you can see, while considerable progress has been achieved, especially in facilitating access to the financial services, there is still more needs to be done with respect to promoting greater usage and improving the quality of delivery. Traditional barriers to the women's empowerment, in particular gender stereotypes, need to be addressed, and credit plus approach involving the whole gamut of backward and forward linkages, holistic training, collective training, improving the training design of the products, etc. That needs to be adopted, and the digital divide, which we spoke about, that needs to be bridged in men. So I'm sure that the recently announced microfinance framework in March this year will help this particular sector, MFI sector in particular, to play even a greater role and facilitate the last mile and address the last mile issues which still remain in the financial inclusion, and they'll be able to further this national goal in a much better manner. Thank you very much for the patient hearing.
Thank you very much, Mr. Sharma, for the keynote address. Thank you for talking to all of us here. With that, ladies and gentlemen, we've almost come to an end of the inaugural session. But before that, we'd like to tell you that Sa-Dhan has in fact been a platform for initiating new projects, and we have in fact collaborated with HSBC over many years. Just extending that collaboration, we are now beginning a new digital project which is called Enabling Digital Solutions to Overcome Digital Inclusion Barriers. I'm going to request Ms. Sonali Shapurwala, Head of Inclusive Banking at HSBC, on the stage. We have actually in fact signed an MOU with HSBC, and I'm going to request Mr. Jiji Mammen from Sa-Dhan and Ms. Shapurwala from HSBC to now in fact exchange that document here. And I request all of you to please put your hands together and witness this moment. Well, thank you very much. And it's time to now say thank you to all of our distinguished guests here. I'm going to request Mr. H.P. Singh to present a little memento, which is a token of our gratitude to Shri Anil Kumar Sharma, ED at Reserve Bank of India, our keynote speaker for today. Thank you once again for sparing, in fact, some of your most valuable time in joining us here today. Requesting our team to very quickly bring in those mementos. And I'll request Mr. H.P. Singh to kindly now present this little memento on behalf of all of us here at Sa-Dhan to, first of all, Mr. Anil Kumar Sharma, and thank him. And one to Mr. V. Vaidyanathan from IDFC First Bank Limited. And once again requesting Mr. Jiji Mammen to give a quick formal vote of thanks.
Thank you everyone for being here for the inaugural session, especially my distinguished guests who are on the dais, Sinha ji, Anil Kumar Sharma ji and Vaidyanathan ji for being here and giving their wonderful thoughts on this day. Thank you so much.